Hello, and a massive hello to everybody. How we all doing? Hope everybody's having a great day. This is 50 pips rocking and rolling in a free world. 5th of December 2016. No trade calls or recommendations. A response for their own stuff. We're here for educational purpose only. So what's going on? So again, very tricky to record anything here because things can move so much. Market will be waiting to see how Italian equities open, how the bonds open. So again, but I still want to do something. So get ready, buckle up for an interesting December. We've got a lot of stuff coming on. We've got Draghi speaking on Thursday. We've got FOMC Wednesday next week. So those are really the most important things. In terms of today, it's really going to be, apart from the PMIs market trying to settle post-Italy, a lot of BS on the news, etc., etc. So circus acts in play. We'll have to see what happens. The only thing that matters is price and how it reacts at the key levels. We do have an RBA rate statement tomorrow. It's going to be fairly interesting. GDT, RBNZ, Wheeler is going to be speaking. We got GDP out of Australia too. We got a BOC on deck with a rate decision. So there are a lot of central banks on the wires. We got trade balance out of China. We've got a Draghi on Thursday, as I said before. So, the weekly US numbers. So there's a lot of stuff going on. And again, this should be fairly interesting to see how we trade. Most people are going to be saying, okay, even if we get some kind of a correction early on in the month, right into FOMC, then it's going to be time for the Santa Claus rally towards the back end of the month. Everything's great. Everything's beautiful. We'll have to see. We're not so fond of calling things like that. So we talked about a lot of things on Twitter yesterday quickly, and I'll just gonna recap those, right, in terms of what the most interesting things are for us. So in terms of the ZBs, again, we're very aggressively short here. We've covered all our shorts, and we're looking for what we would call a healthy bounce, right? So the easiest way to get a feel for this is looking at this on that weekly. You look at the move right into the this 200 on the weekly. And again, the bounces, they can be very, very shallow because the move's so aggressive, but still the healthy play is definitely not to get aggressively short here. Now, it doesn't mean it can't go lower, but again, we think that it's time to have a healthy bounce. As a reminder, we have that long-term channel, on this big unwind here. We said ultimately the target would be around the 140 mark, something like that. So as far as we're concerned, we're interested with the meat of the move, not the last little part of the move. So right here, we think it's, as far as we're concerned, it's done for now. And again, remember, this could easily rip all the way back up into these 164, 160s, and still be holding a very aggressive short tone, right? I mean, unless something happens, bounce is probably, at least the initial bounce, probably not be so aggressive. But here, clearly, we'd be playing for some kind of a bounce, not getting aggressively short. Now, we think that this move on the financials is just completely cocaine angel, right? So again, we've seen this movie before. We've seen this end. Actually, I think it's pretty much JP Morgan and GS which account for most of the move, and that's also why you can see the YM basically has gone completely sky high. So we'll have to see how this ends. We still think the healthy move is going to be some kind of a retracement. Clearly, on any moves down, these breakout zones are going to be the interesting supports and the interesting bull bear lines, right? For us, what we're a lot more focused is on the action on the NASDAQ. And again, here, what we would assume, or what we would be looking for, especially after the way we traded here and the fact that we were still holding inside that election day range, right? All this move, we feel that this is the key, right? That election candle is the key. That is the range we're looking for. And the way we've traded here, we've been stubbornly short, and we still think the path of least resistance is to try and come back down into these levels. And again, it's probably, even if we bounce, and it might be a nice bounce zone, maybe it would be too good to be true not to try and take out, clip some stops below that level. So that's what we're focusing on, but clearly this remains heavy. And as long as it holds inside this election range, we think the path of least resistance is to the downside, not to the upside. And again, similar pattern trying to play out on the ES. Not as pure as the Nasdaq because we're still holding above the election range, but as long as we hold below here, we'd expect us to try and come back down into that election day range, right? Potentially all the way back down into the 21s. And if we get back above, then that's probably where we'll try and do the end of year rally. But as long as it holds below, we think the path of least resistance is still for some kind of a correction to the downside. Now, in terms of gold, we still think that the the move is to the upside. The healthy move is some kind of move to the upside, right? 1150 being the level to watch. Now, we did have some wheeling and dealing overnight, but as long as that doesn't get taken out, we still think path of least resistance is to try and take a stab at the 1200, and that's going to be the pivotal area inside that range. But the way this is trading with all the geopolitical risk, with the way equities are trading, with all the election risk, et cetera, at this point for us, clearly the risk reward is to look for some kind of basing, even if that basing is a labored process. But we still feel that in terms of being extended and all the parameters, we still think that even if you're short, whether you're long or short, whether you're a bull or a bear, the healthy move still is to the upside. Now, we'll have to see if that move is shallow or if it's not as shallow, even if it's ultimately going to move down, but we're clearly not getting short into the hole. In terms of what else we got? We got some of the, crude. A lot of people looking at crude. I mean, here in terms of crude, what we would be focused on is the fact that a lot of people are looking for an aggressive break to the upside here, and for a move back up into this whole 62, 57 range. And again, it looks like that's what's trying to happen, but the only thing we're saying is just be cautious here. I think intraday, any failure to hold above those is probably a decent scalp to the short side. And again, we could be setting technically even this kind of move up. People will be looking at this kind of move. But, we're always a bit skeptical about these deals. So we don't have that much we don't see a lot of opportunities for bigger picture moves right here, even though we expect, as we've been discussing for a long time, that, you'll find a lot of offers into here and a lot of bids into here. So we still expect range bound. But in terms of tactical opportunities going into the week, we think that this is the only level to watch, and that's where everything's going to be fought in terms of bull bear lines. Whether you're trying to play breakout or retracement, that's the level, that's the key. So most likely the opportunities are around here, not, wouldn't be necessarily waiting for something else to materialize. In terms of the currencies, we'll have to see what happens here. The whole question is, are we going to get some kind of a dollar correction here? Now, yen, as long as we hold last week's highs, we expect the healthy move to be a decent correction back into the 111, 110 kind of move. If we trade back above, very similar to the ES, right? It's exactly the same thing as that line on the ES. Market will try and take out those highs. And Euro, what's going on Euro? So fairly nice trading opportunities last night. We talked about the fact that it's all about those lows, right? And you see here, if you look at it this way, in terms of this range that we've been holding for a couple of years, again, clearly the risk reward where we're trading here, assuming we're going to stay in range, right? Because we have to assume we're going to stay in range until we break outside, is clearly to the upside, not to the downside. Now, please understand, we're not calling for 166s at all, right? But even for a retracement back into this area, for then the sell-off, the risk reward is still to the upside, not to the downside, not trying to get short into the hole. Now, forgive me because I'm still getting used to this this platform, but what we discussed yesterday is that the thing that mattered was pretty much were this 105s, right, into the 105.50. That was the, oh God, let me make sure I don't make a mess of this. 105 into 105.50, and that was the broader support zone, right? So this has to be pushed up a little bit. And that was the broader support zone. And as long as that held, you know, you'd be looking for some kind of a healthy bounce. So if we go back on a shorter time frame and you look at how we traded back into that area. Now I have no idea why my chart is completely smushed, but oh, that's probably why. Let's see if I can change this. You know, we came right back down into that. We printed as low as 105.04.01s and we bounced, right? So it looks like the market is still holding there, and you've got a lot of, you know, you've got a lot of area to the upside. So it's just, you know, you just have to be careful about getting short into the hole on these, right? We'll have to see how the market settles. We'll have to see how the euro trades earlier on here, but it does look like it's it does look like it's trying to hold, right? And as long as it holds, it holds. And it just doesn't make sense to get too aggressive into these supports. Look at this action here. So right here, you know what's likely to happen. As long as we're not getting a retest here, where's the market trying to go to? Well, the market's going to be trying to make take a stab back up into those 106.20s. You've got that open gap, you know, and that path of least resistance, right? So again, not the kind of market to chase Momo. Shorter term here, you know, look at this little high here, bull bear line into the open. But again, I think a lot of people will be trying to play that gap fill. A lot of shorts that sold it in the hole will be caught short here. But, you know, the day hasn't even started. You know, it's still a long time to go for the cash opens in Europe. So let's see what happens. Let's see how we trade. Not much going on in Aussie Kiwi, just, you know, some collateral damage, but stabilizing. So again, should be a very interesting week. Hit me up on Twitter in case you have any comments, any questions, and talk to you guys soon. Thanks for listening. Have an awesome one. Thank you so much, guys. Bye-bye.